So hello everyone, in this video I'm going to talk about a common trap that retail traders like myself can fall into while trading options. So I'm having here the Nifty chart, and most people trade in 5 minutes chart time frame, and this actually the hedge funds or the big people also know that. So this is a 5-minute chart, and so how we draw support and resistance, the way we do is by identifying where the price bounces back. For example, here I can draw a horizontal line. At this point, I know that in the 9:40 time, I see a green candle and I think it's a support. Either I can buy call option here at the top, or maybe what I can see is that at this point at 9:50 I see that support line is broken, and then here if I buy put option, let's say at 9:50 we see a sudden price jump here. So here it appears to me as a support, and this jump will prompt many traders to take call option here at 10 o'clock candle, and see again it reverses back, and here again it seems to me that its price is going to fall again, and many people would have entered put option here at this moment at 11:05. And if you have waited till here, then you think this is a support, but this happens to be the true support because from here the price bounced back to some extent. So if I see only at 5-minute chart, I have these three levels, false levels. That's very confusing. And if this was the true level, so this was the true level, so let me put it in green color. But these two levels were also identified because this is where prices bounced. These were false levels. These were set by big institutional players. Hedge funds and big players know that most retail traders trade in 5-minute chart. So they deliberately create this pattern, this morning star here or this breakout candle here. All these are deliberately created so that you buy call option or put option in a hurry, and it only to find out that it reverses and your option decays, because they know that you cannot sell options, it needs money, and it's a well calibrated plan. And so what we can do is, we cannot avoid it 100%, but only thing is we can switch to higher time frame to actually validate if the levels that I have drawn here is actually the true levels. For example, if I shift to 15 minutes, we see that this level is no more relevant because I thought that it's a support, but here I see a doji candle. Maybe this here I would have entered put option and you would have succeeded here till here, a small scalp. But there is clearly no support anywhere until here, the green line. So this was the true support, and this can be avoided. This level was artificially created only to fool retailers by hedge funds. So we can avoid such false levels and unwanted trades. And if I had checked in both in 5 minutes and in 15 minutes, I know that only true level was here around 11:15, and I would have bought call option. If I want to buy put option, then I would have entered a 10:15 put option, a small scalp here, and the patterns looks very. It's not like it was in the 5 minutes. So in 5 minutes we actually saw three levels. If you see in the 5 minutes, we saw three levels. So here there was one level like here. So here it told me that it's going to go up, but it didn't go up, it reversed. So if I had bought call option here, it would have decayed. And similarly the green candle failed, and so if I thought that this blue line was broken by this big red candle at 9:50 and bought put option here, this would have decayed. All this drama would have decayed my put option. And then this here we have a call for call option, but we never know, it could also fall. But in 15 minutes this levels reduces here, it's no more a support, but here in 15 minutes this green candle and this red candle combine to give me a doji. So I know clearly that here I should buy put option, not call option. This green candle here at 925 is deliberately done actually by hedge funds so that people enter this trade thinking that it's a breakout, but it's not. That's why checking multiple time frame is very important, and don't ever rely on 5-minute candles. For example, in 15 minutes we see that it's the patterns, at least false levels. We can delete this and we can consider this level as put option, but here in the 5 minutes this was a big green candle, so you thought it would go up. So I hope you understood something what I was trying to explain here. This is how higher time frame confirmation helps you avoid traps that are created by in intraday trading or scalping. And this is for educational purpose only. Trading involves risk. Again, I'm not a SEBI registered advisor. Please consult your financial advisor before taking any trades. Capitals are always at risk. Trade safe, and one way to confirm your trade is analyzing with multiple time frame to analyze which is the true support and true resistance. Thank you again for watching.